What stock do you recommend that I should buy right now? We are going to take a look at it together. So introduction of CFDs, contract of differences. So a contract of differences is a contract between buyer and seller that stipulates that buyer must pay seller difference between the current value of assets contract time. So CFD allows trader and investors an opportunity to profit from price movement without owning the underlying assets. The value of CFD contracts does not consider the asset's underlying value, only price change between the trade entry exit. Price through contract between client and brokers, and does not utilize any stock, forex, commodities and stuff. So trading CFDs offers several major advantages and increased instruments enormous popularity over the past decades. Okay, so the key takeaway is a contract of difference is an agreement between an investor and the broker to exchange the difference in value of a financial product between the time a contract opens and closes. A CFD investor never actually owns an underlying assets, but instead receives revenue based on the price change of assets. So basically, you own nothing, you do nothing, you get nothing, nothing, bro. You do nothing. It's just about the money, the figure. Okay. Some advantages of CFDs include access to underlying assets at a lower cost than buying assets outright, ease of execution, the ability to go long or short. A disadvantage of CFD is an immediate decrease in investor initial position, which reduced by size of spreading. Other CFD risks include weak industrial regulation, potential lack of liquidity, and need to maintain. What stock do you recommend that I should buy right now? The main top 5. I mean, Portuguese cuts. It really depends on what is your risk appetite. Okay, whether you are willing to take risk or whether I'm not comfortable with risk. What are you? And by the way, it doesn't mean that high risk, high reward. No. I mean, if you take higher risk, the chance of you getting higher rewards, higher returns is high, but it is not. If the higher risk means higher reward, it doesn't mean that way. But yeah, so you need to ask yourself that. And what industry are you looking at? And also more so, do you look into the okay, you get it. Risk all the way. Yeah, okay. So if you're very you're willing to take risk kind of person, then you might be looking into some of the stocks that is technology stock. Okay, they call it disruption stocks. Okay, those technology stocks I would say very risky stock because they can the technology may be obsolete tomorrow if other company were to come out something new. So that is very dangerous, but on the flip side, you can make a lot of returns. So take for example Tesla. It was $100. I mean, there's a reverse split and stuff like that, but take for Tesla or Apple, it will continue to go up because the technology that they have is very good. So technology stock is to go, but you need to know what is the company is doing. If you don't know what the company is doing, then it's very difficult.